In this video, we're going to talk about trend trading with the ADX. This is a good one, guys. Stay tuned. Hey traders, a very warm welcome to you. Okay, so this strategy is for getting on the end of trends, and it's a nice little strategy. Found it online and thought I would share it with you guys, and let's dissect it. Let's look at the pros, let's look at the cons, and let's see if we can bolt it into our trading arsenal or library or playbook, whatever you want to call it. What you need for this is an ADX, and I've got this on a 14 period, which is pretty standard. I've kind of changed the colors a little bit, but of course that's personal preference. The color is not going to make you profitable or not, contrary to a lot of belief. The other thing we can do is, or what we need to do, should I say, is put on two exponential moving averages. I've got one here which is a 40 period, and I've got one here which is a 20 period. Now I'm on a Euro US dollar chart on a daily time frame. So daily time frame, US dollar chart, two EMAs, 20 and 40, ADX on the standard setting of 14. Okay, so what are the criteria? So first of all, we're looking for a filter. The first initial filter is basically telling us we're in a trend. Now, most of the time, if the ADX is above 30, that is indicating we're in a trend. So in this example here on Euro US dollar, anytime we're above 30, let me get it right, we're in a trend. So that's the first stage. Once we see that, we're looking for price to come back and touch the 20 period EMA, which is the blue line here, and then we go long. So if we're an uptrend, we go long. Obviously, we're downtrend, we go short. It's going to come up from the upside. We're going long. Now, the good thing about this strategy is our stop loss is at the 40 period moving average. So it's a very, very defined kind of strategy. And what it does is as obviously price gets a little bit more aggressive and the moving averages start to part, your stop is going to have to be wider because it's going to have to allow for a deeper pullback. So it's quite nice in that way. So look at this example here, one in front of you. Let's get the brush out. Oh, I've lost my my 30 on here. Let's put it back in very quickly so we can eyeball what's going on. That's about right. Okay, so first one will be here, so we'll be long here. Our stop would be just about on this 40 period. Targets, up to you. I would say many multiples of the stop, or take some off at the risk level of stop. Say the stop is 30 pips. You want to take some off at 30, some at 60, some at 90, or you say my first batch is at 60. Play around with that, depending on the market conditions. Another one we've got here again, we're above 30 on the ATR. We hit the 20 period, we're in long here. We have to sit for a few days of chop. Don't get stopped out. The price doesn't touch the 40 period, should I say, and we're off to the upside. Again, we're long again here. Price doesn't touch the 40 period, we're off to the upside. Finally, we come out and we break below the 40 period. Now, those of you who are looking at this are going to say, actually, I can get on the end of a monster move here because I can use price going under the 40 period as the ultimate stop. So in other words, I don't look for targets. I've already, with whatever analysis I've done, I've sort of thought, well, you know what, this could end up really ripping to the upside. I wait for that trigger above 30 on the ADX. I wait for the price to come back and touch that 20 period. I then go long. I then do not touch it until price crosses below that 40 period. So that gives me the potential to really get on the end of a monster move. And now, of course, it's not always going to work, is it? We know that this isn't always going to work, guys. We know, here's a stop out here, for example. You're over 30 on the ADX. You're going short at this point. You're getting stopped out straight away. The point is that the risk-reward ratio is quite high. So for every time you get stopped out, you're going to get a decent move in your favor. So have a play around with that. Let me know your thoughts in the comments section below. Let's have a look at something else while we're at it, while I'm kind of going on. Maybe you can adjust it and say, we actually had a great one after Brexit here, didn't we? Pushing down, push back up to 20 period. You're short, you're above 30 just about. And actually, yeah, not as great as I thought. You probably, if you held it, you take some sort of scale off, you would have been okay. If you held it, you would have been stopped out here as the 40 period course up to it. But let me know your thoughts in the comments section below, guys, because this is the kind of thing that can be adjusted, and I would love to know how whether you can tweak it, and maybe this turns into a 50. Give yourself a little bit more room. Maybe you tighten it up. Maybe you play around with it. But the concept's good. You wait for the ADX to be above 30, indicating a trend. You have some kind of pullback onto your 20 period or whatever period you're using, and then you use the second slower moving average as a stop, which is a nice kind of way of really making a systematic strategy that all you have to do then is think about where you're going to exit it. So anyway guys, take care. Hope you enjoyed the video. Thumbs up if you did. See you in the next one. Bye bye.